The US banking system is in trouble. Regional bank stocks are crashing as depositors flee, incentivized by higher yields. The Fed just made matters worse by raising interest rates yet again. And then add to this mix the fact that the United States itself may soon default on its debt, unless something gets agreed and quick. Now, Cathy Wood of ARK Invest has just done her monthly update, and so we'll take a look at the key points just made, including why the US is not months away but days away from defaulting. Then the fact that liquidity continues to get sucked out of the system, which is not good for risk assets. Then the investing landscape has just flipped into unknown territory, and then we'll finish up with why Bitcoin and crypto are emerging as the beneficiaries in all this madness. Okay, first up, you may have heard that in a few months' time, the US debt ceiling will be reached yet again and will need increasing, or else, as Janet Yellen has said, we will get an economic catastrophe. However, this may be coming sooner than people think.
This week, Janet Yellen, Treasury Secretary, came out and said that she thinks that the government will run out of money to pay bills by June. And so many people thought it would last through August, but apparently tax revenues are not coming in as high as they thought. And so the deadline is now moved from what many people thought could be August, September to June 1st. So this is all about the debt ceiling debate. And we know there is a big divide between the president's proposed budget and what the House is coming up with. We know they're going to raise the debt ceiling. I think they've raised it every year except two, I believe. And the political stakes are pretty high. We are entering into an election year. We think they'll figure it out. I don't know if there will be a technical default or not, but they're going to figure it out. The debt ceiling will increase. And the question is, will they come up with a budget at any point in the near future?
Next up, something very interesting is going on in the world of investing. Now, ever since I can remember, investing has been like a coin, with one side being risk and the other side being the potential reward. And normally, the more risk you take, the more potential the reward. However, this has just flipped. Right now, investors can get a higher reward by taking less risk. So what is going on?
It seems like government spending is beginning to crowd out the private sector. And what I mean by that, this is related to the banking crisis, actually. If you look at what people are doing with their money as they leave banks, they're going into treasury securities for the most part and money market funds, safety. And it is interesting that they think they're lowering their risk by leaving the banking system and increasing their returns by going into treasuries. That's not the way the world is supposed to work. You usually increase your returns as you're increasing risk. So the incentive to do it, given the bank failures that seem to be occurring regularly nowadays, the sensible thing to do is to go for the higher return and the lower risk. Deposits in a banking system can be turned around into making loans, but funds flowing into money market funds backed by the government, treasury securities, those can't do anything. They can't be repurposed. And so that's what I mean by crowding out.
And that's a really interesting point. Now, when you deposit your hard-earned money into a bank, they then use that money to make more money. And normally this is through credit cards, loans, and mortgages. And this actually adds to inflation, as when they create a brand new mortgage, essentially they're creating new money. However, with money market funds, this is like a dead end. So the money goes in, but it just sits there. And this is actually deflationary. And maybe this is what the Fed is wanting after all. Another question to ask ourselves is this: maybe some banks in the US need to disappear. What you may not realize is that there are so many more banks in the US compared to other places. And what the US is doing is outside the norm. Okay, next up, not only is the central bank continually raising interest rates, putting pressure on growth, the money printer has also stopped. In fact, it's actually going in reverse as money and liquidity continue to contract.
And not once did the concept of money supply come up. So it is interesting to note that M2 is accelerating to the downside. M2 in the month of March was down 4.1% on a year-over-year basis. And we think it'll be down 5% or more in April. If you look at the first quarter and annualize it, so from December to March, and then annualize it, money supply declined by 6.7%. If you look at March alone, and of course that's when the bank crisis started, and you annualize that, money supply declined at a 14%. So growth rates are accelerating to the downside. And we've never seen a swing in money supply like this one. We've gone from 27% increase in February of 21 to now minus 4.1%. So that's a 31 percentage point turnaround.
Okay, and to finish up, what has surprised a lot of people is how Bitcoin and crypto has performed during this crisis. Now, last year when Bitcoin and crypto was crashing down, Bitcoin was deemed to be high risk. However, now it appears to be a flight to safety.
And then we've got Bitcoin. And, I think the shock of all shocks to those who do not believe in Bitcoin or think it's a Ponzi scheme or, are blockchain, not Bitcoin in their focus. They're shocked that the Bitcoin has gone from 19,000 during the heat of the bank crisis in that second week of March to 29,000. It's a flight to safety. That's what this is. It's a flight to safety. And those who understand the value of Bitcoin as really the Bitcoin blockchain evolving a new global monetary system that is not hostage to any human decision makers. More and more people want that. And, this is proof of concept. Bitcoin came out of the ashes of 08-09. And basically, it was designed, decentralized, transparent, auditable, as an antidote, a place, again, to go, a monetary system to which investors can flee. And that's exactly what's going on. This move from 19 to 29 was not a flash in the pan. We are still there.
With the regional banks getting squeezed, the Fed continuing to raise interest rates, and now the US might be defaulting on its debt, 2023 has had its fair share of problems. And the summary is that everything is getting flipped. The investing environment has flipped as now banks seem to be high risk and now investors can get higher yields elsewhere. The money printer has flipped, now sucking money out of the system as the money supply and liquidity continue to contract. And then Bitcoin has also flipped from being a high risk asset to now being a flight to safety, up almost 50% since the start of the banking crisis. So there you are, guys. Hope you enjoyed. Now, Obviously, the headwinds continue for high-risk assets, and Cathie Wood appears to be more bearish than bullish again for another month, but let me know what you think below. And for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.